So I'm sitting there, phone in one hand, coffee going cold in the other, just trying to pay my credit card bill. Takes maybe 2 minutes, right? Except before I can get to the payment screen, a pop-up appears. Big, friendly blue. Help us serve you better. Update your annual income. My old number's right there, pre-filled, just waiting for me to confirm it or type in something new. And I just sat there for a second. My name is Robert, and I spend way too much time thinking about the invisible mechanics of personal finance, the psychology of how banks actually make money off us, and why people who think they're playing the game are often being played by it. Because here's the thing, I've seen this pop up dozens of times across different accounts, different banks, different years. And what I've noticed is that most people, honestly, probably 9 out of 10, just update that number without a second thought. Why wouldn't you? It feels routine, helpful even. But there's this invisible dynamic behind that friendly little form that most people never see. And once you understand it, the way you interact with every financial institution you'll ever deal with shifts permanently. If you're someone who wants to understand the real mechanics behind personal finance, instead of just hoping things will magically work out, make sure to hit that subscribe button and give this video a thumbs up if it ends up helping you see money differently. Let's start with something that should bother you more than it probably does. Right now, there is a version of you that exists inside a bank's computer system. Not the real you, not the person who stayed late to finish a project or who's been quietly saving for something that matters or who's genuinely trying to build something stable. The algorithmic you, a profile assembled from every data point you've ever handed over, every form you've ever filled out, every number you've ever entered into a little blue box. And that profile is not designed to serve you. It's designed to extract from you. When you're in what I'd call financially defensive mode, paycheck to paycheck, or maybe a little better but still anxious, still running mental calculations every time you swipe your card, you're relying on these institutions for access to credit, for financial flexibility, for the ability to handle an unexpected expense without a crisis. You need them, and because you need them, you tend to comply. You fill out the forms, you answer the questions, you update the income field because it feels required, or maybe even because part of you thinks it might help. Here's what nobody explains. Banks have almost total informational advantage over you. They see your spending patterns, they know your payment history, they track your utilization, your account age, your behavior across every interaction. Meanwhile, you see a balance. Maybe a credit score once a month if you're lucky. The relationship is about as symmetrical as a chess game where one player can see the board and the other is operating from memory. And every piece of information you voluntarily hand them, it doesn't reduce that gap, it widens it. But here's where it gets really interesting, because the thing most people assume is protecting them is actually the thing making them most vulnerable. There's a specific concept I want you to understand, and I think it'll reframe this entire conversation. It's called ability to pay pricing. And I'll be honest, when I first came across it, I had to sit with it for a minute because the implications are genuinely unsettling. Most people assume higher income means better treatment from financial institutions, lower rates, better terms, more trust. And yes, in some cases, that's true. A higher income can help you qualify for certain products. But here's what the algorithm is actually doing once it knows your income. It's calculating not just your risk, but your price sensitivity. Someone earning $200,000 a year is statistically less likely to notice or care about a 2% difference in interest rate, less likely to call and negotiate, less likely to close an account over fees. The algorithm knows this, and it prices accordingly. So your high income, the thing you assumed was working in your favor, becomes a signal that you can absorb more cost without changing your behavior. That's not a reward for success. That's a tax on it. The threshold that unlocks this isn't some dramatic salary number. It's the moment your stated income crosses into a bracket that the bank's model classifies you as low friction. And you'll never see it happen. You'll just gradually notice that your offers look different, that the fee cards keep showing up, that the upsells get more aggressive. Here's what this looks like in real life, because I think the abstract version undersells it. A friend of mine, contractor, variable income, sometimes a great month, sometimes a slower one, applied for a credit card a few years ago. She was conservative, used her lower months as the baseline for the income she reported. Smart instinct, honestly.
2 years pass. The bank sends a credit limit increase offer. To process it, they want her to confirm her current income. She'd had a good year. She entered the real number, substantially higher than her original application. Within 3 months, everything changed. The calm inbox became a pipeline of pitches, premium cards with $500 plus annual fees, personal loan offers, balance transfer promotions designed basically to encourage debt accumulation dressed up as a favor. She had been reclassified, not as a better customer, as a better target. She closed every pop-up after that, declined every update request, and here's the part I think is remarkable. Within about 6 months, the aggressive marketing faded. Her profile decayed back toward default treatment because the algorithm had stopped receiving fresh data to work with. Stale information is less valuable to these models. They want current data because current data is predictive. The moment you stop feeding the machine, it gradually loses its ability to optimize against you. That's not a small thing. That's actually the loophole. Now, you might be thinking, okay, so do I just lie about my income? And I want to be direct here. No. Providing false information on a credit application is fraud. It's illegal. It's wrong. Don't do it. But there is a significant difference between lying and simply not volunteering. When a bank sends you a pop-up asking you to update your income mid-relationship, you are under zero legal obligation to respond. None. There is no regulation requiring your bank to have current income information on file. Credit card companies generally don't even verify the income you report. They want it enough to ask for it, but not enough to confirm it. Think about what that tells you. They want income data so badly, they've built entire systems to collect it. They just prefer you don't know it's optional. The math of this is actually straightforward. Let's say you reported $65,000 when you opened your account 5 years ago. You're earning more now. Every time you update that number, you reset the clock. Fresh data triggers fresh classification. You become essentially a new acquisition target in an existing account, which is extremely valuable to the bank and extremely costly to you. A 5-year-old income figure, on the other hand, loses predictive power. Banks know this. It's why they ask so persistently. Every income update pop-up is essentially the bank trying to run new analytics on you. Closing it is genuinely the simplest data protection move available to any consumer. Here's where most people mess this up, though, and I want to be careful here because I think the nuance matters. There are situations where disclosing income serves you. Mortgage applications require it, federally mandated, verified, non-negotiable, and honestly appropriate given what's at stake. Auto loans often require it. If you want a credit limit increase and you need it, providing updated income may be necessary to get it. The principle isn't reflexive withholding, it's intentional disclosure. Update your income when it benefits you, decline to update when it benefits the bank more than it benefits you. The problem isn't that the income field exists, it's that we've been conditioned to fill it out as if we have no choice. We've been trained to treat every bank request like a requirement, every pop-up like a legal obligation, every form like a compliance exercise. It isn't. And honestly, the first time you close one of those pop-ups without updating anything, you might feel this little flicker of anxiety, like you did something wrong, like there'll be consequences. There won't be. The account stays open, your credit score doesn't move, the bank will ask again in 90 days. You'll close that one too. Nothing will happen. And somewhere in that repeated experience of realizing that nothing happens, something shifts. Look, I want to be honest about what this video is and isn't. Understanding income disclosure strategy isn't going to transform your financial life overnight. It's not a magic number. It's not a loophole in the dramatic sense. What it is, and I think this is worth more than people realize, is a small but meaningful recalibration of who holds the information advantage in your most important financial relationships. Banks are not evil. They provide real services, but they are optimizing constantly for their profit. Your responsible behavior, paying on time, keeping utilization low, maintaining accounts over years, that's the data that actually reflects your creditworthiness. And unlike your stated income, they can't get just by asking. Your payment history speaks louder than any number you type into a form. Let it. Be deliberate about what you add to the conversation, because 5 years from now, there are two versions of you. One who kept reflexively updating every income pop-up, every form, every request, who became increasingly legible to algorithms designed to extract maximum value from that legibility, and one who understood that information is leverage, that privacy is a choice, and that filling out every form presented to you is a habit, not a requirement. That version isn't paranoid, they're not difficult, they just stopped doing one specific thing on autopilot. Start there. Close the pop-up. Subscribe for more on the real mechanics behind personal finance. Comment below, have you ever updated that income pop-up without thinking?